Welcome to Markets Now. I'm Michelle Rook with Garrett Toay, AgTraderTalk. A mixed close in both grain and livestock futures trade today. And Garrett, let's start off talking about the grains. Corn, the good news there, we did end higher. Short covering, or was it all about this export business that we had over 80 million bushels of export on the flash sales this morning?
I think it's a combination of the flash sale. I mean, it showed us that we had some value buying in here. I think that you saw other people step in here after a fairly significant 30-40 cent break in futures in the middle of harvest. Basis is still relatively weak, and we know that the farmer did sell some at 435 to 440. But end of the day, I mean, we had key levels here at $4. Even though beans rejected $10 levels, I think it'd be interesting to see if we trade much further south of $4 in here. The aggressiveness of the funds that we've seen this week has certainly been interesting. There's a bit of an interesting dynamic within the market between the funds jumping into the sell side and spreads starting to firm in here. As we mentioned, demand, based off the stocks report is fantastic. We had record fourth quarter demand. The farmer sold corn trying to make room, but it was met with the end user purchasing in here. So it'll be interesting. We know that these are demand levels or value levels from $3.75 to $4, and I would suspect that we see that buying pick up here should we start to press lower.
Yeah. So you think it was value buying by Mexico, not necessarily anything that was said by former President Trump about renegotiating USMCA if he becomes president?
There's been a lot of rhetoric. There's comments here this week about it's all threats. It's a negotiation tactic. There's even comments from Mexico's president just reiterating that they're not going to cultivate or import any white corn. It's white corn for food grade. It doesn't really necessarily impact yellow corn, which is the majority of the U.S. exports. So, the fact of the matter is, it's a negotiation tactic. President Trump's on record talking about tariffs with China. Tariffs with China because he wants them to build their factories here in the United States. I think it's all if they do what he wants them to do, then we'll see tariffs go away. But at this point, it's purely we're in the 3 weeks away from the election. It's purely peak rhetoric season, and we'll just have to deal with those ebbs and flows as we move forward.
So the wheat market was higher, maybe in tandem with corn, but also, did you think most of that was just some short coverings, some technical buying?
It seemed more technical in nature. Both KC and Chicago were firmer on a fairly equal pace, even though the forecasts seem to be a little bit more friendly to Chicago wheat than KC. The KC forecasts appear to have a pretty decent chance of moisture in them over the next. There's some chances this week, a better chance next week. But soft red wheat belt looks to be fairly dry. Again, for me, sitting here in northern Illinois, where we haven't really had any measurable rainfall since the 1st of August. I do think that in talking with customers that this is probably going to impact some soft red wheat acres as the ground's hard. I've talked to producers that, we're going to put out 500 acres, but unless we get a rain, then we're probably going to drop that down to 200 or 250 acres, that sort of thing. So, obviously weather is important here in making decisions, and it could impact things. On the other side of things, in technical, we traded up here. The highs that were set late last week with the uptrend last week tied with firming Russian FOB offers in their meeting with the Russian government. That's kind of been a buy the rumor, sell the fact sort of thing since that meeting on Friday.
So what about the soybean market? We opened higher and then actually set back lower. Were the funds back selling today, or were we taking out weather premium?
It was actually, we were spreading, it looked like. The bean S&Ds are still pretty burdensome. You've got a wetter forecast in South America. And as we mentioned before, demand for corn is fairly stout at these levels. So, it's interesting to see the selling in corn the first 2 days and then, buying here today. But I think the market's trying to straighten itself out here and is showing signs that they're willing to buy corn, sell beans. Beans to me seem like they're an easier sell than they are than corn is. Like I said, there's still, China's purchases of U.S. beans, just the China line item alone, are down year over year out of the U.S. Even though they did have record imports here in the month of September. Some are wanting to argue that, well, that's because of impending trade war, that sort of thing. I don't know. But the fact of the matter is up until yesterday, the spreads with this flat price rally had firmed. You actually see bean spreads firmed here. So I think there's just a lot of flack in the air, if you will, in this bean market that creates some confusion. But overall price direction should be lower here. I think with just the negative fundamentals that we have out here in the big U.S. stocks.
What about the technicals? We're getting some signals there as well. We've done a little chart damage, haven't we?
Yeah, today was kind of a textbook day. We had a bit of a, hate for lack of a better term, dead cat bounce. Went up, traded to $10, which is the old support and now resistance. That held, and we resumed the downtrend. We pivoted around that 987, 988 level, which was kind of a key area, and broke, and then settled down here at 980. We do have trend line off of a channel here. Back in early in the year that supports a move potentially 955 as far as support levels, and then up in that 960 to 970 area is that where that channel comes into play.
Yeah. So do you think we go back and retest the contract low, that 955, or not?
The funds certainly have the firepower to do so if they want to. The funds have covered a majority of just a handful of the positions here, and so if they do want to sell, I do think that the farmer, considering the rally that we had through the first half of harvest, I do think that kind of helped the farmer who typically does sell beans out of the field, may not have on-farm storage, that sort of thing. I think that actually did put some beans on the move, which maybe satisfies some of the commercial, needs here near term. So if the commercial is fairly covered and we step back set back here, then we probably move a little bit deeper than we expected, just because the end user is fairly covered. And I wouldn't say fairly covered, but has some coverage, I should say.
So what's your thoughts, Garrett? Do the funds want to move back short or push the short side of the grain market again?
Monday and Tuesday of this week. Monday I wanted to chalk up to just being a holiday trade, but and then they came out again yesterday and hammered it. It's certainly interesting that it does seem that they want to sell in here. The last time we had a short covering event and the funds re-entered, it was around that 425 area where they started selling again, this week. So, it's just interesting that with the interest rates being cut, we've had the dollar do nothing but rally since the 1st of September. It certainly seemed like that macro type trade of sell commodities, with interest rates declining or potentially declining, it seemed like that trade was over. But maybe we're just not quite there yet, and they're willing to sell in here. Like I said, beans seem like an easier sell than corn at this point, especially given the demand. But beans would probably also be the quickest to recover, if the Chinese economy can straighten itself out.
What about the cattle market? Live cattle ended mixed. We had a little forward spreading going on there. The feeders were lower, but I got to ask you, in the live cattle futures, the funds are really long. Are they going to keep defending their long, especially if we can't get above resistance here in the nearbys?
There's doesn't seem to be any subtle fund trade anymore. The funds have absolutely piled into the cattle market over the last 2 to 3 weeks. We're back up here against the 188 levels. The charts, to me, last week I thought that the funds are finally coming back in here. We're going to push, just actually explode through to new highs here, regardless of the thoughts on the economy and potential recession. But the chart, to me, and especially in these fats, it looks like a rounded top in here, and it hasn't been very impressive. I thought that we would see a little bit more reaction here, but we're up against the wall, and doesn't seem like you'll break through. Now, the moment I say that, we'll have a big gap higher trade, or cash will trade on Thursday or Friday, and we gap higher and absolutely blow the old highs out of the water. But at this point, with these lower highs, I haven't been real impressed with the price action.
Yeah, that's definitely possible, and kind of the MO of the cattle market. But Cash trade's been up 5 weeks in a row. Do you think we have enough gas in the tank to make it 6?
That's a $64,000 question. We're kind of at the end of the peak. And I did see a comment today is that with this warmer temperatures and the lack of rainfall that we've kind of have been extending this this fall demand cycle, if you will, from a grilling standpoint. But I do think that we're going to see some purchases for seasonal demand here when we start to get in the holidays. But that's a good question. I don't know if we've got a 6th week in us.
And the hogs, we've also had the funds piling in over there. I know the December futures have a pretty good discount to where October went off the board, or where the index is anyways. What are the funds buying right now, and will they keep buying?
Well, a couple more days and that discount won't be there. But D's kind of led the charge here today. In fact, the hog chart looks a little bit better than the fat cattle does, with the big outside day higher here, and back up against these $78 highs. It seems like to this point you still look at the retail side of things, and pork is still cheap. It seems on the retail side. So I would think the demand probably picks up or at least holds a little bit better.
All right. Good observations. Thanks so much. That is Garrett Toay with AgTraderTalk.